Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And today on the Buy Now, Sell Now lens, we're going to be focusing on HDFC Bank, what's happening with the stock and what should be your next move on this one. But before that, let's have a look at what the markets are up to. So Cheryl, after a weak start, we are just drifting lower and the clear culprit today is HDFC Bank.
Absolutely, and not just HDFC Bank, Reliance Industries also is contributing to that fall when it comes to the benchmarks. A very good morning to you, Shrishti. And yes, though we are wearing bright colors, that's not reflected in the markets today because we are seeing very subdued trading session when it comes to the benchmark indices. As you can see, we are sub that 20,000 mark when it comes to Nifty. Right now, actually inching towards the day's lowest point. And like Shrishti mentioned rightly, so the HDFC Bank is definitely the culprit, is the top loser coming in on the Nifty, also contributing heavily to those losses for the Nifty. In fact, even Reliance Industries together is contributing to that fall when it comes to the benchmark indices. Apart from these two counters, you also have BPCL that is seeing a downtick on a downgrade that is coming from the brokerages for that particular counter. You also have Apollo Hospitals that is seeing a sharp cut, JSW Steel, Britannia are the other set of losers in trade. While on the flip side, you have the names coming in from the PSU end that are holding on to some gains. So you have Coal India that is top sectoral gain, top gainer on the Nifty, followed by Power Grid. You have Axis Bank also that's seeing a strength of approximately 1% or so, Bajaj Auto as well as NTPC that are holding on to some sort of gains as we speak. But if you look at the advanced decline ratio, very much tilted in the favor of declines as of now. Talking about the sectoral indices then, and which is the one that is losing the least, it could be the BSE PSU index and the BSE Power index. They are the ones that are not seeing that much of a cut. You have mid-cap index trying to hold on to some positive territory, that's mid-cap 50 index. But on the flip side is the banks as well as metal and realty that are declining in trade. So that's the way how the markets are looking like at this point in time, Shrishti. But yes, all eyes definitely has to be on HDFC Bank and exactly what sort of has spooked the markets.
Well, yes, Cheryl, 3.5%, over 3.5% cut is what we are seeing on HDFC Bank, and that's after the analyst day of the company. So let's understand what were the key takeaways from the analyst day, and post that, what sort of a target brokerages are coming up with. To give us all those details, we are being joined by Sharad Dubey with us live in the studios. A very good morning, Sharad, and take us through the key highlights of the analyst day of HDFC Bank, and post that, what has actually spooked the market? What was something that the investors and the brokerages didn't like?
So basically two things happened. The NIMS numbers, they are expected to be impacted in FY24. That is roughly 25 to 30 basis points. And secondly, the brokerages downgrades also started giving a kind of a cautious note, at least in the short term for HDFC Bank. Now, if you just look at the important takeaways coming in, the NIM guidance, that has been actually cut down, especially for FY24 because of the excess liquidity which has happened. Also the net worth adjustments. Now, this is post the merger itself. That is expected to impact almost 4% in the total net worth on the FY24 value basis. Now, this is coming in for the going ahead numbers. Now, the high cost to income numbers, that is also expected to be impacted in the numbers, and going ahead, this will be actually due to accounting changes coming in. Also, a sharp uptick expected to be seen in HDFC's corporate loan book as well. Now, these were certain negatives coming in from the meet as well. And if you look at the brokerage's stake as well, Jefferies has maintained its buy rating, but the target price has come down from 2100 to 2030 odd rupees. Also, if you look at Nomura, they have downgraded the stock to neutral with the target price coming from 1970 coming down to 1800 rupees per share. Macquarie also has maintained an outperform rating with the target price of 2110 rupees. Now, do remember, most of the brokerages have stated that the merged numbers which have come, there are certain negative surprises which the street was not estimating. Now that has come out in the analyst day estimates. Also, Investec, they have maintained hold. They have reduced the target price from 1735 to 1690 rupees per share. And for InCred itself, HDFC Bank, they have maintained ad rating with a target price of 2000 odd rupees. But overall, the consensus in the street is that the margins in FY24, they are expected to remain under pressure due to excess liquidity.
All right, so margins are likely to remain under pressure due to excess liquidity is what brokerages are also highlighting. Have you got a chance to look at the Nomura report by any chance in detail? Because I believe they have gone ahead and downgraded the stock, if I'm not mistaken, isn't it?
Well, yes, the entire consensus of the street was the downgrade coming in. And of course, you look at the numbers in downgrade and numbers, that has been significant, roughly 9% from the last target price. But eventually the main question is the liquidity portion, especially in the short term basis, and that is why the downgrade has come in. But of course, NIMS, that is the area of concern. That is something going ahead. The bank has actually stated in the analyst day report itself, for next year there will be a gradual recovery as well, but the short term pain would be there. That is why there is a cause of concern among the broking houses.
Okay, thank you so much, Sharath, for highlighting what were the key takeaways from the analyst day meeting, and post that, what are the brokerages saying on this particular counter and what sort of a target that they are looking at. But with this, viewers, let's move on and let's also connect with our experts onto the show. We are being joined by Vivek Karva of Riddhi Investments, as well as on the technical side, Kunal Bothra, as always. A very good morning to both of you. And Kunal, Sharad just highlighted what were the fundamental factors that are taking the stock down, and 3.5% cut, and even we can see the big impact on Bank Nifty as well. So now that 1600 is once again broken on HDFC Bank, how do you see the charts of HDFC Bank, and do you believe that at this point in time the stock should take a breather, or further selling is something that you're suspecting?
So good morning. This seems to be a certain knee-jerk reaction to the stock price. We've, actually on Monday we saw the stock falling marginally, but then today's gap down probably would, dent the charts for HDFC Bank over the very near term. But the long-term support for the stock in 2023, I think Feb or March, is the stock had taken a major support at the 1530, 1535 mark. So that would be the next level of support. But I think if those levels also get broken down, then we could be looking at a much sharper correction. So as of now, would probably wait out for 1530 as a support for HDFC Bank. But if that gets broken out, then I believe we could be looking at maybe sub or closer to that 1400, 1450 mark also for HDFC Bank.
Right, so 1530 crucial support levels coming in for HDFC Bank. If it actually ends up breaking that support, then we'll see the stock actually drift much lower from those 1500 odd levels. But let's bring on board Vivek Karva also. Very good morning to you, Vivek, and welcome aboard. Buy now, sell now. Thank you so much for joining us on ET Now. And the first question, or rather the question to ask right now, is what should investors do, given the fact that you have HDFC Bank management flagging off those near-term risks as well, your brokerages that has taken into consideration those risks, and they have actually been pretty wobbly on this particular counter. What's your take on HDFC Bank? Do you think you will be able to break those jinx that is seeing and also see an uptick going ahead? What should investors do?
Good morning, Shirel. And of course, I read the entire report and also had a view at Nomura report as well. Now, 2-3 things. First of all, HDFC Bank is not a short-term investment for any investor. It has to be a bit with longer-term horizon. And minimum over here, since the merger was announced, we were very clear that after the merger, the bank might take 1 year to stabilize and then move forward. So it's just hardly, say, 6 months now, and another 2 quarters, that's another 6 months, can be time given to this bank to stabilize. Now, any businesses, the EPS growth and the NIMS in particular banking sector are the most important, and which is going to be hurt a bit because of excess liquidity. But I feel, as we all have been discussing, this is going to be short-term pain. And even after the downgrade, you will see that most of the reports are giving you between 1800 to 2100 as the target of bank, longer-term target, and the bank is trading today at 1568. Which is approximately the book value after whatever, say, losses or whatever liquidity crisis. You calculate between the difference between the assets and liabilities, you will find the book value to be approximately 1570, 1560. And that's where the bank stock price is today trading. So I don't find there would be big downside from here. Longer term investors particularly should start accumulating over here. And the more down it goes, I think there would be value buying which will start happening. And this was known, Shiril. We all knew that this is going to be a problem for short term, and that is what is happening today. So I'm not surprised at all. And I think these levels are good. It's giving you an opportunity to enter slowly and steadily, definitely. And I think it would be back to those 1800 levels pretty soon.
So that's the technical as well as fundamental take coming in on HDFC Bank after a sharp selling today. What Vivek is highlighting that at this point in time, the bank is trading near to the book values and going ahead. 1800 target is what he's looking at. And welcome aboard, Vivek. Hope to see you helping all our viewers with their stock-related queries. But with this, it's time to slip into a very short break. But before we do that, viewers, we at the Times Network bring you Mirror Now Summit Chhattisgarh, which will be held today in Raipur. As India's most influential news network, Times Network channels have been a catalyst for a change and action for a better India. With the theme Path to Progress at Mirror Now Summit Chhattisgarh, we aim to showcase the journey that is leading the change in the sustainable agricultural revolution and enhancing farming methods for economic growth. Chhattisgarh's commitment to enhancing healthcare is evident, with a focus on accessible, high-quality medical services for a healthier future, and highlight the state's rich culture and natural heritage. At Mirror Now Summit, we will discuss and deliberate with state leaders and authorities to define a holistic development agenda for the entire state. So get ready to catch all the action here on Times Network.
Catch Chhattisgarh's illustrious leadership offer a roadmap to fulfill the state's extraordinary growth agenda at the Mirror Now Summit, Chhattisgarh, on the 20th of September in Raipur. State partner,
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that will be on your screen very shortly. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in the stock, mention the buy price, the quantity, as well as the time horizon, which is very crucial, because in that way we will be able to direct your questions to the right set of experts, and our experts will be able to help you better. And talking about experts today, we have Kunal Botra on the technical front, while on the fundamental side today we have Vivek Karwa, who's joining us on the show for the first time ever. And let me kickstart with the queries then. And the first one is coming in from Renu, writing to us from Kerala. Kunal, she wants to know whether it's time to sell V-Guard because she's already making about 20% profit in this particular counter.
Well, yeah, it could be a good time to book profits, even though the indicators are so far not entered into the oversold territory, or rather the negative territory, but then it's on the verge of giving a breakdown of sorts. But this could be a minor correction for V-Guard, because I understand that it's a very low to moderate beta kind of a stock. So generally for these kind of names, we don't expect a sharp fall. But yes, I think if you're sitting in profits, why not book profits over here and then wait out for a phase of a minor correction. In case if the stock say comes back towards 280 to 75, that could be a point where you may look to consider buying back again.
Okay, moving on to the next query. And Vivek, the first query that I have is coming from Parvinder Singh from Noida, and he wants her advice on two counters. Firstly is VIP. He's holding 40 shares from a price of 660 levels. And he also has Polyplex Corporation, 50 shares from a price of 1678 rupees. What he's highlighting that Polyplex especially hasn't performed well. So are the fundamentals going weak for this particular counter, and what to do in both of these names? Will that be a hold, sell, or maybe average out?
Srishti, see, first of all, VIP Industries, this segment, you should take it for granted that it is going to grow multifold in coming years and decades. And particularly it's related to your hard baggage, soft baggage. And the company is growing almost at 18% on capital employed. And the debt in the company is hardly anything. It's just at 0.91 times. So I feel this would continue doing well. You should hold it. If your time horizon is longer period, definitely you should hold it. And what can the company do? You should look at the peer group Safari Industries, which has done phenomenally well. And I think as the system changes from more formalized way, people will stop buying from small shops and will start buying branded products. And VIP is one middle class and lower middle class brand, I should say. So this will continue doing well. See, Polyplex has been doing bad till now, but at these levels, I find the valuations are okay types. They are not very costly after the correction. And the stock can again, it's actually at fair value. So if you are in loss, I think you should hold it on for some more time. And in plastic industry, I think the company might recover this because the quarter is going to get over. I would be happy if I can wait for one more quarter, look at the results, and then decide, because last 3 quarters have been very bad. Now, if you are scared, definitely you should come out. But if you are okay with holding for another a month when the company comes out with results, I think you should hold it on for that period alone, because last 3 quarters have been bad, and I don't know what would this quarter be doing. But overall, yes, after crude going up, there are concerns on this. So if you are scared, I think you should come out.
All right, the next query is for you, Kunal. A very easy peasy kind of a question coming in from Subrata Mukherjee. Is it the right time to buy Reliance Industry with a target of 3,000 in sight?
Yeah, if you're a long-term investor, then yes, definitely it's a good time to buy. Today also, I think there's been a huge volume for Reliance Industries, and the stock had fallen sharply on an intraday basis, but then recovered from those lows. And Reliance, and if I can probably put HDFC Bank and many of these large cap names, you have to have a vision of 2 to 3 years at least into these kind of stocks. And corrections like these, they actually come as strong opportunities for traders for investors who want to build their portfolios from a long-term play. So I would believe that Reliance could be a good opportunity at current levels.
Okay, Kunal, the next query is also for you. Venkatesh from Indonesia has written to us, and he wants 3 stocks from you where he can put in around 5 lakhs of rupees for the next 3 years.
Okay, so for the next 3 years, I think I'll probably place a PSU name over there. Coal India is something which looks attractive, something which I've been highlighting over the last couple of days. I think at 280 odd levels looks attractive for a decent opportunity of a major breakout on the long-term basis. IDFC First Bank from the private sector banking stocks looks also attractive from that kind of a time span, and I believe the stock can offer some decent opportunities on the upside over the span of the next 2 to 3 years. And from an offbeat stock, I would look out for offbeat sector rather. I would look out for IT stocks to actually come back into a strong recovery mode going forward. So difficult to pinpoint just one IT name, but I think as a basket, I think this is a sector which you should start buying on dips, specifically looking at that kind of a time frame of 2 to 3 years plus.
All right, for all of those who are actually asking about Reliance Industry, whether it's good time, what's the target to buy, what's the buy price, Kunal just answered that question, that now it looks like it's a good time to look at Reliance Industries, and also a longer term target can be 3,000 definitely for this particular large cap. But taking the next one, and this one is coming in from Sagar, and this one is for you specifically, Vivek. He wants your view on PG Electroplast. He's got a lump sum shares around 8,700 odd shares, which he's purchased at the price of around 63 to 64 rupees. Saying that this has been an excellent investment for him, given the fact that we can see where the stock price is right now. He wants your view on the entire space. Also, do you feel that the valuations are stretched, or do you see some more headroom for growth for PG Electroplast?
Shiril, you are giving me the tougher ones, not the Reliance types. Anyway, see, PG Electroplast, I think the short-term valuations are surely stretched because the stock has moved really well. And if you find the current P, it is almost at 50 times, which is quite stretched. But the underlying strength in the stock is that the results and the group as such is very good, and that makes it a hold, because if this sort of results continue even this quarter, next quarter, the valuations will automatically come on the lower side. Now, another concern on this is that the mutual fund holdings in the stock are very, very less. They don't hold much of things. So it could be a concern, and it could be a say positive also, because if the company continues doing well, maybe in future they will start looking at it. So I feel you should hold it. The profit has been growing at almost more than 100%. So the space looks interesting, and I find that going forward, if the company continues growing at least at 15% also, this will start becoming at fair valuation. So surely hold it on.
That's a hold coming in on PG Electroplast, but since Cheryl, it's a debut for Vivek Vedas, so we'll try to go light on him. But let's see how the queries come in. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of the stock-related queries. From Kerala, And he wants to know, is this a good time to invest in REITs like Mindspace as well as Embassy Parks? Any take on REITs right now, and will this be a good time to enter into any of these names?
Shristi, I think a lot of investors are confused between buying a real estate company and a REIT. So they should know that REIT is not supposed to move like a stock. And the idea is that whatever rental income these companies earn, because they own maybe IT parks, office complexes, and real estate, wherein they earn rental income, and that rental income is supposed to be distributed to the investors. In the process, what happens is, since these land banks are directly listed via REITs, whenever there is valuation increase in this land parcels, the price of this space also increases, and hence the stock moves. So fundamentally, it is not supposed to move that fast. So if you really want to buy, you want to have rental income kind of thing, 8-9% returns, then you should buy REITs. Otherwise, no. If you really want to participate in the real move of real estate, I think you should go for standalone real estate companies, and many of them are really doing well. You should look at that space. So REIT is not purely real estate. I should put it that way.
This next query is for you, Kunal. This one is coming in from Balan. We also have Pankaj also sent similar message, but what Balan is saying specifically, he's invested in PSU banks like SBI, Bank of Baroda, Canara Bank, Bank of India, PNB, and apart from these PSU names, he's also invested in IDFC. Now he's making 20 to 30% profit in all of these counters. He wants to know whether now he should make that switch out of these counters and look at large cap IT players.
I think you should stay put. I'm not sure what exactly is your time horizon, but 20%, 25% profit, of course, makes a lot of sense on the short-term basis. But if you're a long-term investor and if you're looking to play for a big turnaround or a big trend in the making for the sector, then I believe that there should be a long distance way ahead for many of these stocks. IDFC First Bank has just managed to give a quarterly kind of a breakout. So hopefully by the end of September, assumingly if the stock closes in a very similar kind of a fashion at 94, 95 plus levels, then we can expect the follow through quarters for IDFC First Bank to be very, very strong. And I would also sense that that would be the case with many of the other PSU banking stocks, which have already risen up by 30-40% in the last 1 or 2 months. But what we are talking of is a longer term trend in the making, something which I think I've been highlighting over the last 5-6 months for many of the PSU banking stocks, in fact much prior to that as well. I would believe that you should play out the entire trend if you're a long term investor, which I believe should be a good strategy for both of these differentiated kind of sectors.
Okay, so that's the take coming in on the PSU banking names. But moving on to the next query then, and Vivek, the next query is coming from Pradeep, and he's a senior citizen. He wants a long-term view on RPG Life Sciences. He's holding 20 shares at a price of 790 rupees. So what's your take on this particular counter?
Shristi, first of all, I don't know his risk profile because mid-cap counters like RPG Life Sciences, a senior citizen investing. So there are many factors they should look at it. But if your risk profile is low, you should avoid it. Otherwise, the company is really good because the momentum can be really faster on the either side. The company has market cap of only 2,100 crores. And overall, the debt levels also is quite manageable. I think 0.5 times would be the debt levels. Operating margins have been at the highest. In fact, the profit was highest at 90 crores. So I find that company is really good and undervalued even now. So having said that, all of course, someone of my age or younger age can definitely look at the stock, but senior citizen, I'm having those doubts. So that alone we'll have to look at it. But I think the stock is at least valued at 1,500. It should move to 1,500, at least 250 rupees from here. So you should hold it on if you're happy.
This next one is for you, coming in from Jay Krishnan, and he's a medium-term investor. He wants to know if it's the right time to buy Apar Limited or Apar Industries, I believe that's the stock known as. He wants to know what are the charts suggesting for you. Also, what's the target for the counter in the medium term, and his medium term is about 3 months or so.
Well, it's been an excellent chart, I think, over the last 1 year specifically, where the stock in 2023-22 end was almost at 1500 rupees, I think 1500 or 1600, and from there it's now 5500. So buying the stock over here would be a bit of a tricky situation, because the risk reward may not be favorable for APAR Industries. In case if the stock corrects and say comes back closer to the 50-day moving average, that could be a point where you may consider buying the stock, but I would not suggest buying at current levels because of the steep risk reward.
Okay, that's the day coming in on APAR Industries. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
All of your queries then, and this one is a long-term query coming from a first-time writer to us. This one is from Merlin. She's writing to us from Mumbai, and this one is for you, Vivek. He wants to know whether she should look to invest in Amara Raja batteries for the longer term, and if you will be able to advise her which could be the right buying price for this particular counter, given the fact that it is into the battery space, especially car battery space. How does this one look to you?
Shril, if it is for longer term, definitely a strong buy, because see, there were many issues in battery segment, and that's the reason Amara Raja Excite were not doing well. But after the PLIs and the companies also started focusing a lot on lithium batteries. In fact, a few plants are coming up. Amara Raja also is very say extensively going to expand on this space. So the valuations look very attractive. I feel if you are here for a bit longer haul, because EV is something which is going to play over next few years, you should surely buy and wait for even 1000 levels. So the company is good, management is good, space is good, and the growth prospects also look very promising in the future. So both Amara Raja and Excite.
Okay, that's the take on battery manufacturers. But moving on, and Kunal, the next query is coming from Megha from Bangalore, and she has bought Lemon Tree Hotels at a price of 116 with a long-term vision to stay invested for the next 1 year. Should she stay put with this counter or exit the same?
So I think it's a good time to book out profits over here. The only catch over here for Lemon Tree chart is the bulk of volumes in the last 1.5 to 2 months. So I think if you look at the cumulative volumes for the month of August as well as for the month of September so far, the volumes are pretty much high. Yes, the stock has risen from 105 levels to 125, but then with such kind of strong volumes, we would probably have actually expected or anticipated that the stock should have moved up significantly higher, and not just with a band of 15-20% odd kind of a gain. So that's the only catch, which means that the stock could probably revisit the previous lows of 95 to 100 mark. So that will be a better range to buy the stock back again.
All right, the next one that I have is coming in from Balu. He's writing to us from Bangalore, and he wants to know about Indian hotels, the technical view on this particular counter, Kunal, and he wants a technical view only for this week for Indian hotels, because he's already holding 425 call option at a price of 9.75. That's the average. He wants to know whether he should book losses on this, since only 7 trading days are left for expiry.
See, the stock is still into a bullish territory. It's not that the indicators are going into a breakdown mode. In fact, on the hourly charts, a slightly higher term time frame, the stock seems to be quite okay. And I think 420, 425, call option which you've bought is almost at the money for the stock price. So you can stay put for the stock price. What you can probably look out for is maybe today's intraday low, 414, 415 mark for Indian Hotel. That could be a stop loss. In case of the stock closes below this level, then I think that could be a point where you may look to book out profits or maybe exit the position.
Okay, moving on to the next one, and Vivek, the next query is from Reema, and she's looking out to invest in 4 counters and wants your advice that any of these 4 names is looking attractive to you at this point in time. She has Borosil Renewables, ONGC, Sham Metallics as well as Gland Pharma in mind.
Shrishti, you won't believe, but I sent you a screenshot of my WhatsApp chat, which is happening simultaneously, and I was talking about that or solar panel companies really look good, and there was a discussion happening, and we are discussing about Borosil Renewables. So I think this company you should buy for longer term. It has corrected a lot from tops, and I feel with market share of almost 40-42%, the company looks very interesting for longer period. And in India, it is having 42% share, but it's the only manufacturer of solar panels, and rest is getting imported from China and Malaysia, those kind of countries. So, a short buy.
All right, let's take the next query then. And we have a lot of queries actually pouring in from Bangalore today specifically. This one has come from Jaya, who's also writing to us from Bangalore, and she wants to know about Karnataka Bank now. What's the entry price? How's the short look at Karnataka Bank in the short term?
Well, excellent chart from a long-term play. Short-term wise also, I think it's looking attractive. It's just that the last 3-4 days of run-up for Karnataka Bank has made the stock a bit more overbought. But if you can start buying at current levels and then add on to dips, I think that could be a good strategy for Karnataka Bank. 253 could be a starting point. And in case if it reverses back towards the 50 DMA, which currently is placed at 225, I think these could be levels where you can look to start chipping in case if the stock dips to those levels.
Okay, moving on, and this query is from Krish, and he's already acknowledging the fact that Vivek, he used to listen to you in your voices in our other channel, and he's actually looking out for your advice specifically on Canfin Homes. He wants to know that at today's market price, can he invest in Canfin Homes for staying put for the next 3 years?
First of all, thanks. So even you have progressed from Hindi to English. I wouldn't say progress, but yes, what I will say is Canfin Home looks little, say, one step lower or one grade lower than PNB Housing Finance. If you really want to buy, you should be into PNB Housing Finance and not Canfin Homes. So overall, Canfin Homes also is good stock management. Everything is good, almost earning 17-18% on the capital, on the equity. Once upon a time, I had bought it at 300 levels and sold it also. But if you really go by strict valuations per se, I think PNB is much more interesting than Canfin. So Canfin is a whole definitely, but PNB is much better if you really are going to enter afresh.
All right, the next query is coming from Chandra, writing to us from Mysore, another city in Karnataka. Kunal, this one is for you. She's holding Usha Martin, about 1,000 shares, price of 174 rupees per share for the last 6 months, as per your advice is what she's mentioning. Wants to know any more scope of upside in Usha Martin to add at these levels. What sort of a strategy should she adopt? No doubt, she's mentioned that she's a long-term investor. But with Usha Martin, healthy profit that she's making, what should she do?
Well, I frankly would now suggest to start looking to book out profits over here for Usha Martin. And the only case over here which has changed for the stock is, start of 2023 when the stock was at 150 rupees. The stock used to just try and protect its 50-day moving average. The indicators were excellent for Usha Martin at that point of time, and that's why you saw the stock building onto those gains and moving up from 150 to I think 350, 370 mark, which was the recent high for Usha Martin. Very recently, that's in the last 3-4 days, is you've not just seen the volumes rising up and the prices correcting, but you've also seen the indicators coming into a slight neutral to negative territory. This could probably spell some concerns for the short to medium term charts for Usha Martin. So if you're sitting on profits, I would suggest to book out those profits over here, because if this indicator action sustains for Usha Martin, then we could be looking at a much more stronger correction going forward.
Okay, moving on, and Vivek, the next query is from Dr. Uday Singh, and he wants your advice on 2 counters. He's holding 1,000 shares of Z Entertainment at a price of 273 rupees. The stock is a bit under pressure today, and he's already also holding Praj Industries, 500 shares at a price of 560 rupees. He wants to stay put for the medium term, maybe 6 months and above. So what's your outlook on both of these counters?
Well, Praj will surely be a hold for medium to longer term, not short term horizon, because the stock has already moved up. But what is happening in ethanol space is very, very interesting, and I feel next 6 months would be a dull phase because of elections. But after that, there would be say fresh focus on ethanol driven and cleaner fuel. So Praj would be number 1 beneficiary out of this policy, whichever government again in 2024 comes up. So it's a hold. Secondly, Z is like that dialogue, no? Okay, Tariq pe Tariq. That is what is happening in Z. But overall, after the merger takes place, and some point of time it will take place, it is just a matter of time. So I feel once that happens, the stock should really do well. Now, it's a leading player, I should say leader in entertainment space with the number of regional channels, the reach of the company and the entertainment basket. In fact, Z5 also is doing very well. I find that the synergies would come up once the merger takes place with Sony. Unlike HDFC and HDFC Bank, this would really outperform. So you need patience, be a little bit contrarian, and then you should buy the stock. As a disclosure, I am holding it.
All right, and let's talking about HDFC Bank. We have a lot of queries coming in on HDFC Bank, and yes, viewers, we did discuss HDFC Bank at length at the start of the show. Well, for the long term, it's definitely a good buy, but for the shorter term, Kunal did give a view that 1530 is a crucial technical level for this one. So this query is coming from Krishnan from Trivandrum, because he's told me that since I've taken so many queries from Bangalore, I should take one of his as well. So therefore, Kunal, isn't that what he said? 1530 is a crucial level for HDFC Bank, right?
Well, yeah, absolutely. 1530 is a crucial support, and in case for someone who's looking to buy, then I think that could be a point where you may look to consider buying. Generally, what I've seen is that after such a kind of a sharp gap down which happens into stock prices, there is at least after 2 or 3 days another follow move on the similar direction. So that's the only reason why I would suggest that wait out for that 1530 retest. That could be a better point in terms of risk reward, where you may probably look to time the stock in a better way, as well as the dust may settle closer to that 1530 mark. That may turn out to be a good reward point to enter longs.
Okay, that's the take coming in on HDFC Bank. But with this, viewers, let's kickstart taking all your stock-related queries in the rapid-fire session. And Vivek, the first query is coming from Shankar from Chennai, and he wants to know a good time to enter Rolex ring at this point.
See, auto ancillary would be a hold overall space. So it's being rapid-fire. I'm just quickly telling you.
All right, Kunal, this one is from one of our viewers who not mentioned the name, but did mention that your UPL sell call was right, but now he wants to know, should he go ahead and buy?
I would still not suggest a buy at current levels.
Okay, Kunal, what's your take on DLF? Vaibhav Goyal has bought 3,000 shares at a price of 421 rupees. Should continue to hold on or book profits?
Hold if you're a long-term investor.
All right, for a short to medium term investor, Kunal, Anand N from Gurgaon is asking for Motherson Sumi wiring. Purchase price is 57 rupees per share, making already 13% profit. What should the strategy be now?
Stay put for a target of 68 to 70.
Okay, Rajendra Reddy has a question for you, Vivek. He's holding 3,000 shares of Exide Industries at a price of 270 rupees. Good to hold on or square off?
Definitely hold on. We were just talking about batteries.
Okay, Sana Prasad from Bellary wants to know about Yes Bank holding since the last 4 years, about 2,800 odd shares at a price of 25.36 rupees per share. What's the strategy now, Vivek? Stay put with it or exit?
You exit it better because it is not going to move big way anywhere. Max 22 on the lower side, 16. That's it.
Okay, Kunal, what's your take on PI Industries? A viewer, I didn't get his name. He's looking to invest for the next 3 years.
I think you should avoid the stock at current levels.
Okay, Vivek, Krishna Kumar wants to know about Pfizer, 350 shares at an average price of 4,395 rupees per share. Makes sense to book losses or stay put with this one?
Stock has corrected a lot. I think you should hold it on. Pharma is overdue for a more up move.
Vivek, what's your advice on Indigo? Venkatarani from Bangalore wants to know, is this the right time to enter Indigo with a 1-year investment horizon?
It's quite costly, but on rallies, you should put profit. Right now, hold it on. And particularly after Akash also being in trouble today, I think Indigo is going to benefit.
All right, so that's the view coming in on Indigo. And with that, we come to the end of the rapid fire as well as query segment. Thank you so much, Kunal, as well as Vivek, for joining us on the show, for giving us your views on HDFC Bank as well as resolving your queries. And with that, we are totally out of time on this edition of Buy Now Sell Now. Stay tuned. Markets at noon coming up next.